In the energy quadrant today, crude oil really the story. Natural gas rallied as well with some cold weather forecasts, but there's been a two-day rally in crude oil, and it's really kind of deviating from other risk assets. You've got stocks in the U.S. down 3 days in a row, all of them basically down over 2.5%, whether you look at the S&P, the NASDAQ, the Dow, or the Russell, and normally that would mean a sell-off in crude oil as well, simply because it would be a slower economy, less demand for crude oil, less demand for energy in general, but that's not really happening, although the move in and of itself is really less than $1.50 anyway, from the low 55s up to about 56.44 and up against the 50-day moving average. So the two-day rally isn't necessarily anything to get excited about for the longs right now. It's been okay volume, certainly not a way to look at the bounce that we've seen off the lows as some sort of bullish turn. Shale production looks like it might be falling. The last EIA report showed shale production still up there, but there's signs of a coming slowdown, not the least of which is drilled but uncompleted wells, which fell over 8% last month. So what does that mean? That means that there aren't wells that are only a little bit of extra work away from drilling again for shale. Right now they've got very productive wells. Rig counts have continued to fall, but the falling drilled but uncompleted wells tells you that there's not a lot in the pipeline for if and when price goes higher and production has already fallen off. So that could be a little bit to do with the two-day rally we've seen. And then lastly, we do have EIA tomorrow, and the refinery utilization figure still lags. 89.3 last week, 89.5 the week before. It should be up above 90 if we're actually seeing demand for refined products that falls in line with the normal path of coming out of turnaround and then ramping back up. This is the longest it's taken to get back above 90, and we're still not there since 2011. So you are going to watch whether there's builds or draws in crude oil and gasoline, but you also want to watch that refinery utilization number because it represents immediate demand on the ground.